everyone. My name is Divine Muragijimana and live at IFF 2026 in Kigali. And I'm going to be your host for the CXO conversation today. And with me is Melanie Keita, who is the founder of Melanie Capital. So we're going to spend a few minutes of our time talking to you about what she's doing, a bit of her journey. So I look forward to talking to her and hearing a little bit about what got you here and why Melanin Capital in the first place. So, Melanie, welcome.
Thank you so much. And thank you so much for having me. It's a pleasure to be here.
So before we, get into this serious stuff, tell me a little bit about who are you and maybe a very fun fact about you.
Sure. So as you said, my name is Melanie. I'm French Senegalese. I actually grew up a lot in France. And interestingly enough, my dad decided when he migrated to France to settle in my mom's village in the middle of Normandy, in a small village called Flers. And we were the only Black family there. So my story is a bit shaped about this beginning.
Yeah.
And a fun fact is I used to do a lot of sports. I used to be a horse riding champion, chess also, which is a weird sport to be in, but that's what I did. Ballet and piano and tennis. So that was my whole childhood. And then I moved very soon to Africa, started first to live when I was 18, studied across London, Berlin, Spain, and Australia, and then did a career in finance in Africa, first West Africa and now in Kenya.
In Kenya, okay. And so what got you interested in, because Kenya is a very strange, moving from France and then you went into West Africa for a bit and now you ended up in Kenya, which is, not we don't find a lot of francophone speakers, at least in Kenya. So what got you actually in Kenya and why stay?
True. Kenya was an interesting choice, but for me it was making a lot of sense because it was closer to my grandmother and my grandfather who were in Congo. So basically, just to give you the background, I came to Congo for the first time when I was 21. My dad had not gone back for 25 years. And I thought that I really wanted to meet my relatives. Congo was in war for a long time, so we couldn't go back and forth. And I waited for me to have enough money to also support my dad when he goes there.
Yeah.
So when I was 21, I met my grandfather and my relatives for the first time. And I thought, okay, there's a lot to be done here. There's a lot that I could bring on the table based on my studies in finance and so on.
Yeah.
But I didn't find a job in Congo. So I thought, let me try to find in the neighboring countries how I can find a job in finance and support entrepreneurs, because that was my calling at the time.
Yeah.
And Kenya had a lot of UN jobs, a lot of development finance jobs. So I made a bit of an obsession of going to Kenya.
Yeah.
In fact, I had the national park as my background in my laptop for 2 years until I managed to get a job at the UN. Did not stay to the UN very long because I'm more of a private sector person, I would say. But it really opened to me a bunch of opportunities across the continent. I realized that entrepreneurship was also much easier in Kenya than in French-speaking countries. And I was passionate about the climate topic, and Kenya has a lot of the biodiversity, lots of solar companies. And I thought this is really the place for me. It became a calling. So I stayed, continued my career. Then I built a business, and then I also got married in Kenya. So it's home now.
So you're not leaving Kenya anytime soon?
Oh no, I'm not leaving ever. I look forward. I always joke with my husband because everyone talks about people wanting a passport from Germany, from France, and so on. I look forward to having my Kenyan passport.
Your Kenyan passport. Yes. Okay, well, hopefully very soon. So your experience coming back. So I have this thing where when I moved back in 2014, 15, and I was of course Black, of course, and then I was called an Oreo a lot. So I've had when you're talking about your coming back to Africa experience, which is something I like to talk to, especially expatriates. What was your coming back to Africa experience like? Like if you could define it in one word.
Yeah, it was shocking. I think you asked one word, so it was shocking. Why shocking? Because I grew up being called the Black girl, right? in my school, primary school, I was the only Black girl in the room. When I did the horse riding, you can imagine there was not also a lot of Black people. In ballet, there was not a lot of Black people. In piano championships, there was not a lot of Black people. So I was really, even in university, we were in a business school of 2,500 people, but we were 5 Black students in that business school. So I was really used to being called Black. I was used to hearing go back to Africa, whatever. So when I came to Congo in 2014 as well, actually, and I heard that word Mundele, which is a bit, it's in Lingala, it's the same as Muzungu. So the foreigner, the light person, I was a bit in shock. Like, I was like, what do you mean? I'm like, I'm Black.
Yes.
Like, it was very strange to me. But then it also helped me to understand that there's no one box for one person. So I accepted that I am both. I'm not neither or. I'm both.
You're both
Black and white, and I am both African and European. And it helped me, that whole going back really helped me to feel whole, actually, to get the identity that I had not grown up with.
Yeah.
And that's why I thought, I've spent the first 20 years in my life in Europe. I want to spend the rest of my life on the continent and bring the brick that I need to bring to that big wall of what makes Africa.
All right, that's beautiful. So tell me a little bit about Melanin Capital. What are you building there?
So Melanin Capital is a digital bank for green businesses in Africa. The reason why it's called Melanin Capital is because initially we wanted to build a bank that was really dedicated to African entrepreneurs using African capital. So really using the deposits of local Africans that want to contribute to the development of Africa.
Yeah.
It became very focused on climate and agriculture because we realized that's where most African entrepreneurs are. 60% of the jobs in Africa are in agriculture. So if you want to really make an impact, I believe that agriculture is very important. And what we're trying to do is really to provide very basic, boring working capital loans to small entrepreneurs that want to scale. So you see, like, most of the businesses we meet, they have big clients, maybe Carrefour, maybe if I'm an agribusiness, for example, I sell to Carrefour or I sell to Danone or to large companies. Those companies can take time to pay me, 60 days, 90 days, but I still need to have the cash to buy the inventory and build the products and then give it to them.
Yeah.
So we bring that cash. So that's our trade finance product, where we really support those agribusinesses and even clean tech companies that, for example, sell electric vehicles to large logistic companies and they need like the inventory in advance. That's what we do. And then we also have a product where we finance carbon credit projects because a lot of our companies now are getting certified and it's additional revenue for them. So that's where we wanted to specialize. So it's niche, but it allows us to support, we now raised around $8 million. So we are able to support around 100 companies in the agri space this year that then supports up to 50,000 farmers. So we're trying to like make sure that with our financing, we trickle down until the smallholder farmers, and we even offer to those smallholder farmers accounts now, backed with EcoBank. Yeah.
Talk to me a little bit about who you define as an entrepreneur, because this, I'm assuming, is an ag entrepreneur. So there's actually like my question is a bit almost like, and I'm going to put you on the spot a bit because I know I promised not to, but I will. Just a bit. The carbon credit companies, given there's a recent, of course, conversation around this, if you know,
of course,
what has happened. So right now, there is a lot of skepticism around anyone who is dealing with carbon credits. But then also there is that just when it comes to the end, to the last mile, the end user, it's very like it's the definition of an entrepreneur who's having those smallholder farmers and of course their communities is a bit depending on who you talk to, has a very broad definition.
Absolutely.
So I'm curious about one, your maybe opinion and sense around this now very skeptical view on carbon credits and carbon markets in Africa, and two, how do you see an entrepreneur in an ag space? And then of course I want to say green, but even green hasn't taken. So what's your definition of that type of entrepreneur? What do they look like? Where are they located? And then for carbon markets, do they work or not?
Absolutely. Let me start with the carbon markets, because I have a very almost activist view of the carbon markets. Because for me, the ones who will benefit from carbon credits are companies from the emerging markets. So Latin America, Southeast Asia, and us as Africans. And I believe this is a reparations that we are due. Why? Because when you look at Europe and America and the industrialization that they enjoyed over the years, they're the responsible for climate change. So that carbon credits that they're paying, that they're finally paying as a service and not as aid, that's what we are owed. So I am very, very, very particular about carbon credits, because I think this is what we are owed to be able to provide to the world an environmental service. We have the largest sink of forest. If you look at Congo, the Congo Basin, Gabon, Gabon actually even emits less emission that it absorbs just with its forest, and it's a petrol country. So I think that if we are able to certify our companies properly, put the right integrity, put the right transparency into carbon credits, we can actually generate a lot of revenues for them and even become a net exporter of carbon credits, meaning we can sell more carbon credits to external countries like France, Germany, Switzerland, and to companies like Microsoft. So for me, this is a very important conversation. What's happening today with the coconut wash scandal, for example, it's because this is a market that is still structuring. So there's still some things that needs to be put in place, regulations, the right standards, the right auditors. It's like accounting has not been done. Financial accounting has not been built in a day, right? It's going to take time for it to structure. But I think as African entrepreneurs, this is a topic that we should take very seriously and that we should be able to take part more. And I'll finish by saying that I was in COP30 in Brazil last year, and I felt that Brazil and a lot of Latin American countries have actually understood the opportunity, and Brazil is making billions of dollars just with carbon credits. Of course, they have the Amazonian forest, but they're still having a lot of projects. You can't get just carbon credits by having a forest somewhere. You still have to show the additionality and how the projects that you are financing are reducing additional CO2. So they've seen the opportunity. I think that as Africans, we're still too shy, although we already have the assets, we already have the forest, we already have the solar, we already have the EVs. So we have to just make sure we can capitalize on it and not see the climate conversation as something that tries to hinder our development, but more as an additional revenue, that can come to us.
I think that view has definitely been, and it's also maybe the lack of understanding is one, and it's just a lack of structuring, because cocoa, yes, on the at the top, when you're looking at the larger picture, of course, yes, we talk about that it failed because there was lack of structuring, but the costs at the bottom, right? So again, last mile, there was a lot of people who dependent on the service.
True.
And I think, there's a larger conversation, and I'm not sure we can finish that conversation, but I think there's a larger conversation and maybe more of an ecosystem conversation, because I think we're having this conversation on carbon markets. I feel like that's the conversation everybody's having because I think it's cool, or, but even as we're thinking about it, I think there's a sense of, there's an analogy that Dr. Patrick Njoroge uses, the 3 cups of tea, and understanding the context. And the bottom line of this story is that we need to understand the context. And I feel like we haven't really sat down to understand what's the African context when it comes to carbon credit, which carbon markets is there, in your opinion, maybe, since you have a very strong opinion about it, which market do you think will be ready to become a carbon market, so to speak?
Well, I think Ghana, first of all, is very advanced. They already have put together very strong relationships, also under an instrument called Article 6, which is an instrument between countries that basically helps a country to reduce their emissions through another country. And it's agreements that are a bit complex that Ghana has already put in place. Kenya is also putting it in place. And that's why the Cocoa Network story is a bit unfortunate, because Kenya had already sold quite a large number of carbon credits. There were good agreements put in place. And in this story, honestly, we still need to see how it pans out. But it's a mix, as you said, it's an ecosystem also issue, because there was a lot of backup for Cocoa Networks in terms of financing from abroad. And then it was backed by the government. And at the end of the day, it's the government that didn't authorize the transaction, which made the whole card castle fall apart. And that is really unfortunate. I think South Africa is also, in terms of financial services, already a very mature market that is already making a lot of move forward. So in my opinion, those are the three countries that are making the tide. I'm waiting to see countries like Gabon and Congo coming into play, because they have a huge opportunity, especially on deforestation credits, which are the most expensive credits today. I think Ivory Coast as well has a big opportunity. And we're just waiting to see those countries organizing themselves. The African Development Bank just started a window for carbon credit trainings for government. So I'm hoping that this could help our organizations to be trained, because the problem of carbon markets regulation, it has to come from the top. Like it's we can do things as entrepreneurs and so on, but if they don't put the regulations, if they don't agree that, for example, Nairobi Stock Exchange has to be the one regulating the markets, and that the Ministry of Environment is the one verifying the credits and so on, we can't move forward as entrepreneurs. So that's where I see a bit the future, and it's gonna take decades, so we have to be very patient.
We need, we're not very good at being patient. I think we nowadays, at least, I think once in our time we used to be a bit more patient. Let's pivot a bit back to the entrepreneurs, back to smallholder farmers. I have an infinite love for anyone who is solving for either SMEs or smallholder farmers. But like that definition of who a smallholder farmer is, I'm sure, of course, in the US and other markets, the ag space is essentially run by corporate farmers, right?
Completely.
And here we have 90% of our farmers are smallholder farmers, and it feels like, as much as we have many people who are solving for smallholder farmers, we haven't defined what an entrepreneur in this space actually looks like. What are they doing? And who is actually, like, if you think about within the community, in that ecosystem of small ag, who do you define as an entrepreneur there?
All right. So I also have a strong opinion on this. So let me start by a bit of a banker definition, right? For me, everyone that is self-employed is an entrepreneur. Now, in the ag space, you have two types of entrepreneurs. You have the smallholder farmer, which is usually registered as a sole proprietor or a freelancer. So he's alone, maybe he has like one or two employees that are maybe not even formalized. Then he has like more of a subsistence farming plus. So he has a bit of excess that he's selling, and then he produces for himself. So those are the 90% you're talking about. And then you have the entrepreneurs that are set up as a limited liability company, who are making quite a lot of revenues already, like in the more than $50,000 a year, what I would say. And they actually even buy from the smallholder farmers. A lot of them are aggregating. If you see even in Kenya, the avocado space or even the grain space, you'll see that the bigger farms, the ones who actually have the lands to produce more, they will buy from the small ones. So what I think is an issue in the ag space, and that is taking very long even for us to solve, is when you go to that smallholder farmer, you have to have in mind that you, as a Nairobian sitting in your big skyscraper, might not be the right person to solve their problem. You need to be working with a chain of people. So us at Melanie Capital, we work with agri-techs that also have their agents in peri-urban areas or in bigger cities like Eldoret and Kisumu and so on. And then those agri-techs work with cooperatives that also work with the smallholder farmers.
Yeah.
And what we need to be patient about as Africans is also to understand that we need to spend more time to build that value chain of financing, because we saw a lot of fintechs fail by trying to come from Nairobi all the way to the smallholder farmer in the countryside and trying to think that you can do everything with tech, but not with a relationship building.
The relationship.
It's not possible. Finance is about trust. I need to trust that you can give you my money back, and he needs to trust that I'll continue to support him when he gives the money back. You can't do that if you are, I'm talking about now Nairobi and the countryside of Eldoret in Kenya, but it would be the same if you are in Lagos and you're going to the northern side of Nigeria and trying to finance the smallholder farmers. So what I really believe is important is to build that chain of collaborations and that ecosystem where you or us as a bank, we also work as a digital bank, as a fintech. We also work with a bigger bank, which is EcoBank, who also work with the African Development Bank and the African Guarantee Fund, who are bigger institutions.
Yeah.
We also work with governments. The money from the government flows all the way to the African Development Bank, the African Guarantee Fund, EcoBank, which flows to us, which flows to the agri-tech, which flows to the cooperative, which flows to the smallholder farmer. And that is how we make it work.
Yeah.
Because it's a very hard job. You have to imagine that those farmers also, they won't speak the same language as you. I speak English, Swahili, and French, but that farmer will speak Kigali, and he will trust someone that can speak Kigali and that can understand where they're coming from. And as much as I'm going on the ground a lot, I can see that there's a better person than me to do the job. So let's collaborate and work. Yes, we're working with pieces of technology. We have digital wallets, we have credit scores and so on. But at the end of the day, what gets our money back is this relationship.
No, I mean, I agree. I think relationships are everything. And actually that context, and over time, I think I've understood that we spend a lot of time building the product and less time understanding the context and even more less time building the relationships to make the products work. So anyways, I know we're almost out of time, but let me ask if you could make a 1-minute pitch on why is this the most important problem for us to solve today?
The access to finance, you mean?
Yeah.
I think that the access to finance issue is one of the most important problems because it's also an easy problem to solve. We have 80% of our businesses that are small and medium enterprises and that are still not financed.
Yeah.
It's just completely absurd. And when you look at how every Western market has developed themselves, they went through debt access and they went through capital access. So if we want to support the majority of the population, if we want to create the majority of jobs for the 2.5 billion people that will come into the job market in the next 30 years, we need to be able to provide the financing that will help our businesses to move from micro to small to medium to large corporate.
Yeah.
Because honestly, we need to stop having this conversation of Africa having micro businesses. In the next 30 years, we need most of our businesses to be medium to large businesses. And it can't happen without access to finance.
Yeah.
And I think it's an easy problem to solve because when you look at our banks, our pension funds, our insurance, depending on which data you're looking at $900 billion to 1.3 trillion. So the money is here.
Yeah.
It's just staying on the surface, being invested in the American markets or in the Euro bonds or in government bonds. And it's not trickling down to the rest of the economy. If we are not doing it as African institutions, who is going to do it? Are we going to continue waiting for the USAID, for the international institutions, or are we going to take the responsibility of financing our own economies? So I think that this is one of the crucial problems to solve. We are here at the Inclusive Fintech Forum. We all about financial inclusion because it is a problem that we can solve.
Yeah.
And it is a problem that needs to be solved if we want to be up to the challenge that the next 30 years are going to bring to us.
All right. I can't even add to that. So thank you so much, Melanie. One more, coffee or tea?
Ooh, it's a tough one. Tea. Because
Okay.
coffee is giving me palpitation. So it's a delicacy I take only a few times.
All right. Thank you so much for joining me. And I will see you around. I can't wait.
Thank you. Thank you so much for having me today.
Thank you, everyone. Until next time.